Hi everyone, welcome back to our weekly trading forecast for the week of 14th of September to 18th of September. Right, so my name is Dylan. Of course, over here I have JJ with me. All right, so let's go to the charts right away. All right, so right here is the dollar index. So last week, what happened is that we can see the dollar continues to climb further after a previous week. I mean, after the bullish rebound from the previous week itself. And that actually causes some kind of structural breakout. And what do I mean by that is if you were to go to the 4-hourly charts, you can see that previously after the dollar hit a low right here at somewhere 92.6 in late July, dollar index has fell into a range. So from then till now is about 1.5 months. And finally, during the range itself, we saw that the dollar is still going down, okay, bit by bit. And finally, last week, we saw that the price had a clean break out of this, this falling trend line, or you can even see as a temporary falling channel. And so right now, it does seems to me that the dollar index will be able to pull back even further from here, especially when we saw that the dollar index actually tried to came down again, and it found support just nice at this area of interest, I would say, right? And yep, so the dollar still managed to close higher. In the day charts, actually just want to share that in terms of area wave, a technical analysis to measure the entire wave of a trend, we can see that the area wave has been completed, right? From the top all the way, right? The first wave, second pullback, third wave, fourth pullback, and the last wave came down and started to range, and right now is rebounding off and pulling back. And of course, I want to bring you all the way back to 2017, early 2017. The same thing actually happened for the dollar index as it reached the a high at 103, came down as well. And after it have completed this much of a volume, it started to pull back very significantly. So if we were to replicate this volume onto what's happening right now, is about the same, right? And therefore, I believe that the current pullback will be a significant one, just like what happened previously in August or September 2017. Well, what a coincidence is also in the month of September as well. So with whatever that has happened right here, I definitely believe the dollar index will be able to climb further. Is I think mostly also due to technical oversold as well. But anyway, this week we want to take note of FOMC meeting minutes. It will be very important for the dollar, and of course for other things like gold, the stock market as well. All right, so for dollar index, if we were to look to buy all the way to the 1-hourly charts, I think is going to range for a while. At the beginning of the week, it might continue to range within a, I don't know, maybe a symmetrical triangle, something like that. So we can just wait for further pullback. We can always use Fibonacci retracement as a guideline, somewhere between the retracement level of 61.8. All right, right here we can see an area of interest right here, all the way to 70.6. Usually will provide some good opportunity, good support for us to buy the dollar again. And in terms of the target, definitely I believe you can at least pull back to this important resistance area at 94, and furthermore you will go all the way to the top of this entire falling channel, as you can see in the day charts. And even further, the final level that I'm looking at is right here within this very important supply zone. Yeah, that's 95.4 to 95.9. All right, so that's for the dollar index. Moving on, we have the euro against US dollar. All right, so euro against US dollar, very similar to the dollar index. Again, same thing. The euro dollar, okay, has been ranging upwards as well, creating a rising channel. And finally, last week it broke below, pulls back, and got resisted again at a important level right here and came down again. In fact, I think again we can always refer back all the way to what happened previously as well, right here during this entire uptrend. So similarly, right, this entire volume, right, as compared to this, all right, not that equal, but at least the dollar index does provide us with some clue, and with the with whatever that's happening right now, the current structure that's creating right now, definitely looks very similar to this area itself. I'll just put this up, right? Very similar to this area, all right? And so right now, if you were to look at this area, let me just shift back, okay? You can see that actually this is kind of the head itself. And once this hedge has been created and the price came down, we don't really see the price going beyond that level anymore. In fact, it's just being resisted at the previous high just before it created this high. So meaning to say somewhere at this area, it got resisted and started to go down. And after which, we also see that it broke below the range bottom in this area. So going all the way back to what's happening right now, the similar thing could happen as well. This is the range bottom that we have right now, and this is the high that I'm talking about, and this is the head. So actually last week we saw that the price has already pulled back all the way to this level, and there's already a very obvious bearish trend coming down right here. So if we were to look at the 1 hourly charts, I do believe that the euro dollar may very soon continue to fall again. So if we take this bearish trend as a reference, then we can just wait for to wait for a pullback, right, somewhere back to this supply zone right here. So that would be about 1.1870 to 1.1890. That's where we can look to sell the euro dollar again. So let's see if it's going to create something like a retracement channel for us to sell the gain. So that is for the euro dollar. Target wise, as I've said, definitely I will look. I'll be targeting at somewhere back to the previous low right here, this support level at 1.1750, and going further, definitely this support right here as well, another important level, 1.17. All right, so I think this will be two levels I'll be looking at for this week, and yep, that's for the euro dollar. All right, so next, I will pass my time over to JJ to share his trading plan for the week.
All right, first we have this dollar CAD. Similarly to the dollar index, we can see that there is a very clean break from this trend line that started in March. So it is a very clean green candle break. And in the smaller time frame, we can see that it broke and then it got supported. So this week, I would look to buy dollar CAD again. If there's an opportunity, there will be two waves down back into this previous, something like a symmetrical triangle breakout. If price comes back to around this level, I think this will be a good level to buy dollar CAD. And we can see that the first level of resistance would be this area. Previously, when dollar CAD came crashing down, breaking out of this very long-term consolidation pattern, it formed a double bottom here. And also we can think of this as a key, it's a level of interest. So if price were to get rebounded here, This will be the first level of resistance, and the second level of resistance would be where price previously formed this head and shoulder, the neckline of the head and shoulder. Secondly would be pound dollar. You can see that as mentioned last week, after the 3 waves, price broke through this trend line this week. You can see price actually get downwards before forming this doji candle here, before it got supported at this level of interest. You can see whenever price came around this level, it got resisted or supported. So similarly to dollar CAD, this week I would be waiting for maybe 1 or 2 waves of retracement, depending on the volume and how fast it forms, and back into this level, this supply zone here, before selling pound dollar again. And you can see that the next levels of support would be this demand zone and also the neckline of a previous head and shoulder pattern here. So this will be my 2 analysis.
Yeah, all right. Thanks for sharing, JJ. And of course, the pound dollar, we have actually shared last week as well about the possible breakout of, and of course, forming a very strong bearish trend. So that really happened just a little bit more than what we has expected. So yes, I think right now what I've shared and what JJ have shared is very similar. We are looking at the dollar, which will be pulling back, which will cause other currency pairs against the dollar to start to fall even further at this moment. So, and especially for the pound, I think there has been a lot of issue with the Brexit deal recently as well. So that seems to have taken a very huge toll on the on British pound, and so yeah, this is definitely a good period of time to sell the pound against the US dollar. And as for dollar CAD, I think recently oil prices also start to crash downward as well. So definitely that's going to affect the Canadian dollar. And therefore, with the dollar pulling back at this moment and the oil crashing downwards, causing the Canadian dollar to fall as well, definitely buying the dollar CAD, which has already broke out of a very long-term falling trend line, is going to be a very good a trading decision, I would say, at this during this period of time. All right, so next, coming back to my screen. All right, so next I want to talk about the gold. All right, as you guys have seen, the gold price in terms of volatility has been getting smaller and smaller as it continues to range within a symmetrical triangle, I would say so. To some people, it might be actually a ascending triangle. Most importantly, we saw that the price has been supported at this previous 9-year high. So anyway, going further into a smaller time frame, and then what happened last week is that the gold actually rebounded off after completing the another bearish wave within the range. All right, so it went up again. If you look at the 1 hourly charts, actually it forms 3 wave of a bullish wave, which we can actually refer it to the to the ERA wave, the ERA impulse wave. So this is the first one, the second, and finally the third one completed. And right now it is coming down. If we were to also using ERA wave as a reference, this is the first wave, and the second wave is about to form, maybe all the way back to the bottom of the entire range again. And this can really be used because if you look at what happened previously, the same thing is happening actually. 1 wave, 2 wave, right, and finally the third wave as well. Previously as well, the bullish trend from the bottom to the top of the range as well. All right, 1, 2, and 3. Okay, yeah. So it kept forming the same thing within this entire symmetrical triangle of this entire range. So I think coming for the coming week, since we are also waiting for some form of a pullback for the dollar, I mean in terms of pulling downwards, right? Then I think we can actually continue to look to sell the gold in the beginning of the week if possible, because this entire structure has already came out. You can see that it actually resembles a head and shoulder as well, very similar to what to this area as well. Maybe it might just range a little bit further. So of course, it's always definitely better for you to wait for pullbacks before you sell. So if it's able to pull back, of course, the best price to sell is somewhere right here at this very small supply zone, which is at the price of 1,947 to 1,950. And then, yeah, and you can just hold the trade, targeting at all the way back to the bottom, the previous 9-year high, 1,921 as the final level to take profit for the goal. All right, but however, take note of FOMC, because I think that is going to create a lot of volatility. It may change the entire situation right now. There might even be breakouts of out of this entire range. So just be very careful as the FOMC is approaching. And if you are having a trade like selling the gold, anything has to do with the dollar. Okay, last but not least, let's take a look at the US 30. So the US 30, as you can see, due to the sell-off in the tech shares as well, we are seeing that the stock market is coming down a lot. So, well, how do I say it? Actually, if again, based on Elliott wave itself, definitely we have seen, 3 waves that's being completed, and of course, there's very strong break of this rising trend line as well. But however, at the same time, if I were to measure this entire channel itself, all right, we are seeing that the price is currently supported at the bottom of the channel. So having seen the stock market came down so much, after completing such a huge dip, I think there's always a possibility that investors may come back to buy the dip again, and this is definitely already a very good price to consider doing so. And also given the fact that this is also a very important area. All right, it's the previous high, very strong support. So this entire area does provide some form of demand to buy back again. And if I were to look at this entire structure, definitely it has also completed pretty much 3 waves of a downward trend. It came down again. This time it doesn't break lower. In fact, it just got supported. So at this point of time, it is really hard to gauge. I think going forward, government is still going to print money, and as long as that doesn't stop, the stock market will always have the opportunity to climb even further. So one thing that you might want to consider is to try to buy the low right now. You can try buying the low right now, but don't look too further. Don't look too far. I think if you can just capture 1 wave, that's really pretty good already. I mean, in terms of if I do it intraday, if you think that the Dow Jones will still be able to continue to climb and eventually come back all the way back to the historical high right here, just like what happened to NASDAQ, S&P, which has already broke above the historical high, creating new historical high already. You can of course try to hold it as well. If the Dow Jones were to continue to pull back, we can always use the previous sell off as a reference in terms of the entire volume. So if that's going to happen, then the most important levels that we can consider buying the Dow Jones again is somewhere 26,300 all the way to 26,000 area. So that's pretty much for Dow Jones for this week. All right, and with that, I have come to the end of this week weekly trading forecast. So thank you so much for watching, and we'll see you again next week.